And we are live from Bloomberg's world headquarters in New York. I'm Shonali Bassick. Tim Stenevec is off today, and welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance. And first up, Ether ETPs are on a tear. BlackRock's fund posting record monthly inflows. More on that with Figment founder Lorien Gabel in just a few moments. An IPO summer, the push into public markets heating up with a growing list of firms looking to debut. And shares of Galaxy Digital plunging after reporting weaker than expected results. That's all ahead, but first we're going to give you a snapshot on what's happening in markets, crypto markets in particular. It's a down day, but it's been a risk-off kind of move. We've seen tough economic data this morning. Bitcoin still around 113,000 almost, still down almost 1.7%. Ether feeling, of course, a little more pain, 3.6% lower on the day. Coinbase tends to fall in synchrony, doesn't it? It is more than 5% lower today. MicroStrategy, though, a little less, 3.2% lower. I want to flip up the board here and just really harp on Coinbase for a moment here, because you do see, that's Galaxy Digital first. Galaxy still down more than 9%. They did report earnings this morning, and similarly also caught up in that attitude that you're seeing, that risk-off attitude of investors. But there are some places you see it more than others. I want to look year to date at what's going on, because you see Coinbase, yes, down today, but up more than 20% this year. Robinhood up almost 200% this year. The two firms getting more and more into each other's crosshairs. Coinbase was met with a muted response after reporting quarterly results. Robinhood much more favorably here, but you did see the analyst community upgrade Coinbase to the tune of an average of 2.9% for its stock. So more upside anticipated even after that muted response. Now you can see it benefiting Robinhood as it gets closer and closer into Coinbase's businesses. This is an interesting chart to watch over the coming year or so. Now, for more, we're joined by Lorien Gabel. He's co-founder and CEO of the crypto staking firm Figment. And we're so happy to have you today because Ethereum is a pretty great place to start a conversation, isn't it?
Look forward to it, thanks.
And you look at what's happening in Washington and the excitement around crypto and the push-pull in the markets in terms of how investors are latching on to it. What are the big unknowns for Ethereum as Washington changes its strategy around regulation?
So I think obviously the regulatory changes have been fairly significant for the industry, and specifically for Ethereum, which is really the method by which we'll start to rewrite our existing financial system. So, you know, Bitcoin has its narrative around essentially being digital gold, and Ethereum is really the tool upon which much of the new financial system is going to be built. And until now, for regulatory reasons, it's been very unclear about the status, whether it's a commodity or not, et cetera. And so this administration and a bipartisan Congress has changed that with the 3 bills that are currently before Congress. So I think it's going to be very positive for the industry in general and Ethereum in particular.
Is the Clarity Act going to change anything?
Yeah, I think all of them. The market structure bill will do a whole lot. It'll help significantly in defining Ethereum's role as essentially the network for things like stablecoins. And also, you'll start to see a whole bunch of back office changes within traditional financial institutions that will be building things on Ethereum.
What can you tell us about the kind of demand you've been seeing since the rules have been hinted at changing? Yeah,
so for years the regulatory environment wasn't great. Winston Churchill had a saying that the Americans will do the right thing, but only after we tried everything else. And we finally got through the tried everything else stage, and now with these 3 bills, I think you're really going to see a lot of clarity for people how to build. And you're seeing that with the ETFs, which you mentioned earlier. We're with significant inflows in the last 6 months. Bitcoin and the Ethereum ratio had been at an all-time low, and that started to change. And I think that's usually a sign that people are looking at something alternative to Bitcoin.
So where do you expect, I'm sure you got asked this a lot, Ethereum to be trading by year end?
Yeah, we do something called staking, and that's infrastructure. So I am the worst person you want to ask about where Ethereum will be trading, but you're starting to see a whole bunch of new adoption. Every stablecoin volume is an all-time high, and that basically runs on Ethereum. So Ethereum's processing more transactions than ever. So I think that's pretty generally bullish for the price.
even though it's bullish for the price, you haven't seen a lot of investors fully wrap their heads around what Ethereum can do in the future. Many more people are used to Bitcoin.
That's right.
How do you sell that story?
Yeah, so Bitcoin doesn't really have any functionality. It is really a version of gold for the digital age. So that's a very simple narrative. Ethereum is a little more complicated, but you can really think of it as programmable money. If you want a TradFi analogy, it's like an open version of the Visa network or the MasterCard network, where anyone is allowed to build applications like stablecoins or real-world assets or issue tokens with these things called smart contracts. So you can see it as essentially a version of an open computer network that is programmable and anyone can use.
How do you explain the risks around staking from a regulatory perspective right now?
So those have just been clarified. Staking, it's a weird term. Sounds like something that you would order at a restaurant or in a vampire movie.
We're the crypto show.
Right.
We're used
so
to
people are used to that. So there's really two operating systems for blockchains. One is proof of work, which Bitcoin runs on, which your watchers are probably pretty familiar with. Lots of energy consumption, lots of compute power. The other operating system, which Ethereum, Solana, et cetera, run on, is something called proof of stake. And essentially, it accomplishes the same thing. It's a way to run a blockchain in a decentralized way. If you own Ethereum, you can essentially participate in running the protocol. It's like as if you were the Visa credit card holder, you could process transactions. So staking is really the way that if you're a holder or your customers as an institution hold Ethereum, you can actually participate in running the network as if you were a Bitcoin miner, but for Ethereum. And you do that by locking up some of your Ethereum, and then you can share in the growth of the network.
I'm also interested here in your work with exchanges, brokerages, banks.
Yep.
This morning, you might have heard President Trump was speaking to CNBC and talking about the banking industry, criticisms around debanking, and the crypto industry in particular has complained about this for a long time, not having access to traditional way financial services. At the same time, you see Goldman years ago forging in and helping facilitate a futures market here, right? So it's not that the banks have stayed completely away. You had JP Morgan and its blockchain product. I mean, how much has the banking industry started to accept crypto, particularly in this new administration?
So I might take a level up, and there's been an internal debate in this country going back since its founding about centralized, Hamiltonian versus Jacksonian debate about whether you have centralized financial entities or you have something more bottom up. And I think crypto is an answer to an overly centralized financial system, which culminated in the great financial crisis. But essentially we have a few large institutions which are too big to fail, which is crazy that they exist. And I think crypto is an alternative to really have a bottom up financial system, which isn't controlled by a few large banks, et cetera. So I really see this as part of the American tradition of having a constant dialogue between top-down centralized power and bottom-up state, a way to organize your financial system.
Okay, fine. I'll bite on this for a moment here. Insofar as to what extent does this work or create new risks? Because there are a lot of people out there who will say, well, it's interesting, stable coins, new way to find demand for U.S. treasuries, that's great.
Right.
There is another camp that says, well, okay, if this is a system that operates on different payment methods, why wouldn't China then have a more dominant way of bypassing traditional financial systems as we know them today, like SWIFT?
Right. So I think that there's, what people don't realize is that in many ways crypto is actually, I think, more safe in some regards. If you look at like the fractional reserve system, when you deposit your money into a bank, they're going to lend it out, right? And if you'll have a small enough amount, you'll be covered by FDIC. If you're a large deposits, then you won't be. Whereas something like stablecoins, for example, they're matched 1-to-1 now by law and the Genius Act. So I think in some ways people don't really realize the risks inherent in the current system, and in many ways crypto solves for a number of those problems.
Lorien, it's so great to have you here on set. That's Lorien Gabel, co-founder and CEO of Figment. Now coming up, big banks are coming for small fintechs over free access to customer data. We're going to speak with the CEO of one of those firms that's fighting for open access next. And we're talking about Galaxy Digital. It's struggling from a drop in trading activity. We're going to break down their earnings. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. is Bloomberg Crypto. I'm Shonali Bassick in New York. Now, a battle over customer banking data that raged for more than a decade has just been reignited. Back in October, the Consumer Financial Protection Bureau established the open banking rule that guaranteed free access for customers and tech companies to banking data. Banks like JP Morgan have argued that they should be able to charge for data access. Now, the CFPB says it is reconsidering that rule, and it could upend countless crypto and fintech businesses. One of those companies, SaverLife. It is a nonprofit fintech company that caters to those with lower incomes. Its app uses incentives for users to build habits for financial wellness. And joining us now, Leigh Phillips, CEO of SaverLife. And you look at the push-pull here between the banks and the larger fintech industry. Explain the issue from your perspective.
Well, thanks so much for having me. And as you mentioned, SaverLife is a nonprofit, and we primarily use data aggregation technology to connect to hundreds of thousands of low-income consumers all across the United States. So for us, we're using this information, the data that flows through our platform, really for social good. So we are looking at helping people save, helping people build assets, providing tailored financial information and guidance to low-income families. And, data aggregation technology, the ability to connect to people's bank accounts was a game changer for us. Prior to this, we served maybe 1,000 people a year in the Bay Area. And now we're serving over 700,000 people all across the United States. So it's been a real benefit to SaverLife to be able to scale our work and help many hundreds of thousands of people across the country.
Now, this is an intimate topic for you because you served as chair of this Consumer Financial Protection Bureau's Consumer Advisory Board from 2021 to 2022. How much have things changed, right? Because this is a bureau here that has been highly politicized in the years after.
Mm-hmm. Well, we've always firmly supported the work of the CFPB, being an advocacy organization that focuses on the financial well-being of people who don't have any money to lose, right? There's no room in their budgets to fall victim to predatory practices or fees, excessive fees, and so on and so forth. So, yeah, we have been working on this issue, the 1033 rule, for many years. I thought that we had closed the door on that chapter, but here we are again. I think it's a shame when this type of important work is politicized in the way that it has been. And I think we all need to be doing what we can to make sure that we're protecting consumers. And frankly, I don't even know who I would call anymore, if I was in a situation where I myself as a consumer had suffered harm or on behalf of our clients.
What type of responsibility is there really at the end of the day for the big banks to be working with the larger fintech community more harmoniously? Because you could argue that a firm like JP Morgan will look at a bunch of fintechs and say, well, these are competitors. We don't need to be playing a more significant role. On the other hand, these are massive, systemically important banks that have lending tentacles into every financial service institution. So where does the data and the responsibility around it play a role?
I think if we step back and kind of look at the population that we care about, right? So families in the US, working families making less than $50,000 a year. And unfortunately, the mainstream financial sector has not served these families well, which is why we've seen such a move towards financial technology. So at SaverLife, more than 50% of our members are using some kind of financial technology. Many more are using payment apps, right? So that's a really big thing for people using Venmo and Cash App. 45% are using a neobank, a challenger bank like Chime or Varo. And so I think that a couple of things. I think we've got to understand why have these products become so popular, particularly with low to moderate income communities. They're really serving a need. And in some ways, we don't agree with all of the fintechs out there. We think there are some that are very, very harmful. But if you're someone who's living paycheck to paycheck, you don't have money to lose to things like overdraft fees and check cashing fees, like all of these things. And so I think that that's a really big, important piece of this. So if our goal as a society, and I hope it is, I know that many people don't see it this way, is to allow for a fair and equal financial system, then we got to make sure there are products in the market that work for everybody. Not that we're trying to change people to fit into mainstream products, but really looking at people's needs. So we work a lot with folks who are gig workers in the economy. And if you're a gig worker or you're self-employed, all of your income is coming probably through a Venmo or a Cash App. And so if companies start charging for that data, that's going to be a big ripple effect on how people manage their daily lives. And so for our membership, this is just not, it's not just an inconvenience, right? Like this is something that could really hit budgets.
Leigh, I want to also point out the community, the crypto community and the fintech community's conversations with the banking industry and the frustration they've had around the relationship. This is a little bit of a curveball here in terms of how this was addressed by the president this morning. But here's what President Trump said earlier on CNBC in his complaints about the major banks. Take a listen.
Hundreds of millions. I had many accounts loaded up with cash. I was loaded up with cash, and they told me, "I'm sorry, sir, we can't have you. You have 20 days to get out." So I went to another one. I ended up going to small banks all over the place. The banks discriminated against me very badly. They discriminated against many conservatives.
Now, this has been hailed by the industry in a large part by banks coming back and then saying, well, wait a minute, we need clearer rules of the road of who we can and can't bank based on different types of rules that exist for anti-money laundering, anti-financial crime, and all sorts of things that might keep them from banking certain types of clients for reasons that are often made unknown to the client, right? This is a complaint that is made across the financial technology community as well. Venture capitalists have complained about it. I just wanted to get your view here, and if you thought that his view here had any merit.
I think if we think about people who are unbanked in America, so I'm, obviously more concerned with people who lack access to day-to-day financial services than what may or may not be happening with President Trump. But if you think about the unbanked rates in America, 20 years ago, it was 15% of the population didn't have access to a checking or a savings account at a mainstream financial institution. That number is actually now 4.5%. So that's a really big win, right? Like we've made a lot of great strides in increasing access. I've been heavily involved with the Bank On program, which has helped thousands, hundreds of thousands of people access banking, and many banks participate in that program. So I think as a field, we've been making really great strides in increasing access, but at the same time, access to checking isn't enough, right? So we're looking at people who need access to short-term credit, people who need to get paid and make payments in ways that are affordable, where their checks aren't being held by banks. So I would say that for lower-income consumers, there's still a lot of things that we need to improve. And I would hope that, if banks are looking to not be challenged by fintechs, that perhaps they will take a look at their own products and services and see how can I better serve this market in ways that work for them and help them thrive.
Certainly an interesting moment for the financial technology community. We thank you so very much. That is Leigh Phillips. She is the CEO of SaverLife. Now, coming up, Galaxy Digital taking a hit after reporting earnings that missed estimates in this crazy, wild, volatile crypto market. We're going to bring you more on exactly what happened next. This is Bloomberg. Bloomberg Crypto, and I'm Sonali Basak in New York. Galaxy Digital taking a hit after reporting earnings that missed estimates. For more, let's bring in Monique Molima in Toronto for Bloomberg News. What led to the decline in profit? You would think that people are trading pretty actively right now.
So yes, people are still trading, but trading activity was actually down last quarter. Galaxy reported that they saw 22% less spot trading, and the industry as a whole saw a 30% decline in spot trading. And Galaxy isn't the only one. Coinbase, when they reported results, cited the same thing, that they were seeing retail trends down for the quarter. But Galaxy has pointed out that for July, they're starting to see more activity pick up, both on the retail side and on the institutional side. And
we should also say that Galaxy, though, is still up almost 54% for the year, even with today's drop. That is about double the appreciation you've seen in Coinbase's stock price. Now, what impact is CoreWeave, data centers, the deal that we're seeing in that industry, expected to have on Galaxy? Because a lot of people have a lot of fascination on how closely tied Mike Novogratz is getting to this industry.
Yes, so like a lot of Bitcoin miners, Galaxy has switched to focusing on AI and HPC data centers as those rewards for Bitcoin have decreased. And they struck this deal with CoreWeave earlier this year, and they announced today that CoreWeave has exercised the final option for the deal, so they're going to be taking on more of those megawatts of power from Galaxy's data center. It's not expected to impact any of Galaxy's revenue until 2026, and the full rollout won't happen until 2028. But Galaxy says that if all of the phases are exercised and if they reach full capacity for their data center, they could see up to $1 billion a year in revenue from 2028 onwards from this endeavor.
Could take a minute to play out, and of course we should note that there is some question about that CoreWeave deal. Bloomberg Intelligence reporting that CoreWeave might actually eventually alter the terms of that deal depending on how shareholders react. Monique Molima, we thank you so very much for your time. Now, a growing list of firms in the industry are seeking a public offering in the coming weeks and months. That includes Bullish, Figure, Gemini, and American Bitcoin Corp. For more, we're going to bring in Anthony Hughes, who covers equity capital markets for Bloomberg News. Fascinating. You saw Circle. That was a very specific thing, wasn't it? Because it was stable coins and it was in the middle of the stable coin bill passing Congress. But what about the rest of the firms that we're seeing come to market from a crypto perspective? Are they seeing the same type of, or anything near that type of investor interest?
Well, I think overall we're seeing the IPO market generally quite strong recently with some very good returns. We had Figment last week, and you mentioned Circle from June. But as far as crypto goes, we're seeing a lot of capital go into the crypto sector in a variety of forms. And the traditional IPO is one form. We've also seen a lot of money come in via the SPAC route, and then also reverse mergers and things like that. So there's just a lot of money coming in, and you've got to trace a lot of it to the regulatory clarity that we're seeing, or and also the SEC sounding quite accommodative to people raising money, capital formation in the crypto sector.
How is Bullish doing so far as it looks to IPO? It looks like they're seeking $629 million. What do we know so far about the roadshow?
So the roadshow only began yesterday. All the early indications are that this will probably be a fairly strong outcome. It's early days. One interesting thing about the IPO is that it has about a third of the money they're raising is going to be contributed by BlackRock and ARK, which, if you remember, were also large cornerstone investors on the Circle IPO. So if there's a commonality there, which is quite interesting. But also, Bullish's story is very much about the institutional adoption of crypto and being part of that via their exchange business, but also the information services businesses they have. And they also own a lot of Bitcoin. So in that sense, it's going to be interesting for investors to decide which part, how they want to play the crypto story. They can play it in different ways, of course.
And of course, Bullish, run by the former New York Stock Exchange president Tom Farley, not to be confused with the Bloomberg original show. Bloomberg's Anthony Hughes, we thank you so very much for your time here. That's all for Bloomberg Crypto. Join us same time, same place next week. This is Bloomberg.